you make $100,000 a year, but you only have 50 to 100K, it means your family can only live without you for 6 to 12 months.
That's true.
That's crazy, right?
All right, Hackerproof, another episode, and today I'm with Bokar. Bokar, you're in the life insurance. Sorry, not life insurance. What do you?
Yeah.
I'm gonna let Bokar introduce himself.
No, you're right. Oh, well, okay. So
I'm gonna let you introduce yourself.
Yeah, so my name is Bokar Diaby. I run a life insurance agency here in Charlotte, North Carolina.
Okay.
So what I do, a lot of people know the death side of insurance. I teach people on the living side because it's actually meant to, life insurance is actually meant for you to build wealth while you're living and also protect your assets as well too. So, and that's the side that a lot of people don't really know about.
And by the way, this is a special episode. We're in Charlotte for 6 p.m. in Charlotte, and we decided to film an episode with Bokar, co-host of the event. And just want to talk about the event. What are you feeling for tomorrow's event? How are you feeling? How's it going to be?
Oh man, I'm excited. So, and the reason why I'm excited about the event is because there's not a ton of professional events here in Charlotte that can, where a lot of people get together, a lot of professionals get together outside of partying. Let's say that, right? I feel like I might be canceled for saying that. But
no, you're gonna be canceled.
Nothing gets you canceled.
But no, outside of partying though, there's not anything in Charlotte that gets people together in a professional setting. So I'm really excited about it. The panelists that we have there are going to be crazy fire. We got all types of people from all types of backgrounds. And we got individuals who scaled their career in tech on the sales side. We got individuals who've been in tech for a while. We got individuals
on the talent acquisition side.
Right, exactly. We got, and then even as someone who's a software engineer, but also builds her
personal brand outside.
That's what I'm saying. That's what it's about, So, but yeah.
And also like to introduce our partner for this event, Wole. Wole, go tell people who you are a little bit.
Thank you for the introduction. I'm excited to be here. My name is Olawale Shogbola. I'm a senior IT audit manager for one of the top tech companies in the world. In addition to that, I also have a couple of organizations. One of them is House of Founders, where we bring entrepreneurs together and also have panel discussion and how can we grow together and build things together. So I do that once, every other month in Houston, Texas.
Solid.
Okay, solid. Nah, I think we'll get right into it. You said you're a life insurance broker.
Yeah.
A lot of people who are working in tech or working in finance or working in the corporate field,
right,
they don't really think of life insurance. They usually think what they get through work is good enough.
Right.
What's the reality of that? Why is life insurance really helpful in terms of what you need to, stack wealth?
That's a great question. So I feel like that's a two-part question. So
take as long.
I got you. I got you. So life insurance through your job. A lot of people, I get that a lot. Like,
not even life insurance, like just the stock options that they have compared to life insurance. Because usually when someone's working a corporate job, they're getting stocks,
right?
Stock matching,
right?
Really, life insurance is like a second option for them. Like, I want you to break down the process of why life insurance is important. What's the reality of it? How life insurance can help you?
I got you. Yeah. So if you took a look at your entire investment
portfolio,
right. So you got to ask yourself, if you took a look at everything, like what percentage of your investment portfolio would you like to be protected from market loss?
Okay.
For some people, it's 0%. Great. Have your company stock. That's all you need. You might need a term policy, right? Just to have a life insurance policy, right? If it's like 50%, great. For sure, a company stock is amazing through your job, especially if you work at, like, let's say a Microsoft or like a Google. For sure, have company stock. That's absolutely amazing. But you should also have money elsewhere where it protects you from market loss as well. Now, if you would like all of your money protected, right? Cool. Once again, keep the company stock, but you should be putting money elsewhere in other places where, once again, you got that 0% floor.
Okay.
And there's not a lot of there's not a lot of financial vehicles that exist that allows you to partake in the upside of the market while still having that 0% floor outside of a life insurance policy. Like
by 0% floor, are you referring to what does that mean really? Because I'm not dived into the life insurance side of things yet. I'm more just the stocks, property. So I want to know more about it so I can maybe like educate myself into going to that side of the field too.
I got you. So when I say a 0% floor, what that means is like, let's say, so these different life insurance policies, right? It's like an index universal life insurance policy. That's the primary one that
is that IUL?
Yeah, exactly.
IUL, okay.
And that's the one that I'm primarily speaking of, right? So it's tied to different indexes. Okay, it can be tied. We're not tied. I'm not gonna say tied. It mimics the positive behaviors of these different indexes. So it can be the S&P 500 index. It can be a Fidelity index. It can be a BlackRock index. It can be a Morgan Stanley index, whatever, right? And so what happens is when the market goes up, the cash value in your policy goes up too.
Okay.
But when the market goes down, you're guaranteed to not lose anything because you have a 0% floor. So like if the S&P 500 crashes like it did back during the housing market crash of 2008, you get to a 0% floor, meaning you don't lose a dime.
Okay.
That makes sense?
Okay. But are you still gaining?
Yeah. Okay. So when the market goes up, so these different types of policies, at times they have caps.
Okay.
Right. So let's just say it has a cap of 9%. Right. So if the market does 20, you get 9. If the market does 8, you get 8. If the market does negative 38, you get 0.
Okay.
That makes sense? Right.
Protection.
Right. Exactly. Right. So like what I typically ask my clients is like, okay, so we understand, money in stocks and a 401k and all that good stuff. Whenever the market goes up, it goes up. That's what we like about it.
You get the full growth.
Right. I get the full growth. Right. So so we like the growth potential. But what's the number one thing that most people hate about their money in stocks and things like that?
They pay tax on it when they take it out. Is that it?
Well, so not just that, but the main thing that most people don't like is when they see a dip. That makes sense? Right. They don't like that loss. Right. Now they always say it always comes back, but if you understand, not trying to get like way too technical, but if you understand how math works, like let's say you put $100 into into the S&P 500. If the market goes down 50%, you're at $50.
Yeah.
The next day, let's say the market shoots back up, that same 50%. Most people assume you're back at your original 100, but you're not. It's only $75. That makes sense?
Yeah.
So understanding that aspect of it, you got to understand what your risk tolerance is, and if you're okay with that, cool. Like I'm someone who even though I run a life insurance agency, I also invest in stocks and crypto because I have that safety. Because I have money
it's
going.
Good to be diverse.
Right, exactly. It's good to diversify. So because I have money in insurance policies, I actually invest more aggressively because I know that if the market like goes bad, I still got this egg right here that I got.
So one question I have is you have the life insurance policy. When it's time for you to actually need that money, what's the process of taking your money out?
That's a good question.
That's a great
question. I feel like that's the hardest part. Everyone talks about that. Because everyone thinks basically, that's a good question. Everyone thinks that with life insurance, you can only use that money once you're dead and it doesn't go to you. It goes to your kids, your wife, or your spouse.
Right.
Like, Wale, go ahead. No, that's true. That's a good question.
I got you. So first things first, let's talk about words, right? Or terms. So if life insurance was only meant for death, they would call it death insurance, right? Real life insurance is actually meant to benefit you while you're living. That's why they call it life insurance, right? Cool. So the process of taking that money out. So there's two ways you can access money from a life insurance policy. One is whenever you want to, just to pull out to like buy assets or buy whatever. It doesn't really matter. It's at your discretion. The second way is in the event of a medical related thing, right? So I'm gonna just throw some numbers out there. So let's say that you have a policy, it has $500K of coverage. Cool. And if you have a heart attack, stroke, or cancer, get hit by a bus, get in a car accident, develop Alzheimer's, like whatever the illness is, you'll be able to access that $500K while you're living. So what the process is, you and your insurance agent will put in a claim. They'll give it to the insurance company. The insurance company will approve it. They will mail you a check. Well, mail or direct deposit, depending on the insurance company.
Yeah.
Right. I've had clients and that's called a living benefit. I've had clients who have benefited from stuff like that. Okay. Now, let's say that no medical event happens, right? Let's say that you like as you pay the premium on the policy. Let's say the premium is like $300 a month.
$300 a month. Okay.
A portion of that premium, let's say about $30 to $50, pays for the actual life insurance of that $500K.
Wow.
The remainder of it, it gets put into this thing called cash value, and that's what gains interest at a 0 to, let's say, 9%.
Wow.
That makes sense?
That's that yearly? Annually.
Compounds, right?
Annually.
I'm gonna be honest with you guys. I tell my clients 0 to 9% because I like to under promise and over deliver.
Yeah.
Would you guys be surprised if I told you that my life insurance policy passed? So last
People
year,
like numbers, so if you say something.
Oh yeah, I know.
You say big numbers
Now, when I say these numbers, I can't guarantee that because I don't control the stock market, right?
You don't.
But with indexing the S&P 500, last year my policy it grew on average 14%.
Wow.
The year before, about the same thing because
That's beating out the S&P 500,
right? Because the S&P 500 has been doing pretty well, right?
But it's not the average. The average is like 8%.
Right. But that's my point.
14.
Right.
Yeah.
So the first quarter of this year, the S&P 500, it took a dip. Why? Because of like the tariffs and all that stuff, right? And then war. Yeah, exactly. I didn't lose a dime. The minute it recovered, now I'm growing more money. Does that make sense?
Okay.
Right.
I'm getting interested.
Right. It's crazy.
The way you're explaining is making more interesting.
Right. It does. How? Okay, I got another question because this sounds all good.
Okay.
How is this different from the one you get through work?
How's it different than the one? So
That's a good question. I'm trying to figure it out.
It is. Yeah. So a life insurance policy through your job. It's group insurance,
Okay.
right? So what the job does is they say, hey, can we get like a bundle pack for all of these employees that we have, right? So, and they say, okay, what's the minimum amount of features that I can have on it? So that means through your job, you can't use it while you're living, okay? Right, so in the event you have a heart attack, you can't. Why? Because they got the minimum amount of features on it. Does that make sense?
Yeah.
Cool. On top of that, 95% of life insurance policies through your job, if you read the fine print, it actually doesn't pay out unless your death is job related. Right. Right.
I didn't know that.
Right.
I didn't know that.
That's news to me, bro.
So you never get that money.
I've had clients like when I explain that to them, like they're like, oh my God, like that happened to my cousin or my aunt. Like somebody passed away on vacation and their job life insurance is trying to fight it. They're like, oh no, that makes sense? Cool. Right. It's very crazy.
I gotta go to the fine print of mine, bro. Because I did.
You should read the fine print. Yeah.
I did elect life insurance.
Yeah.
What's that
on my work from my work benefits.
Right.
But it's like probably it's just like $1 million. But I don't know if something happens, if it's not work related.
Yeah.
Right. Yeah, exactly.
That's crazy.
It is. And then on top of that, so it sounds like you have $1 million through your job, right?
Yeah.
Cool. You are lucky. Would you be surprised that most people through their job only have like 50 to 100K?
Yeah,
which is not enough, right?
Yeah.
Because if you make $100,000 a year, but you only have 50 to 100K, it means your family can only live without you for 6 to 12 months.
That's true.
That's crazy, right? Yeah. But even so, is anyone ever going to work until they die?
Nah.
No.
No one plans on that.
Right, they're eventually going to retire. Right, great. The minute you leave your job...
See, that was going to lead up to my next question.
Right, exactly. So now...
The minute you leave your job.
The minute you leave your job, it's done.
It's done.
So what
if you're laid off or anything...
You're laid off, it's done.
Jeez.
Right. So what happens to a lot of people is when they're older... They leave their job because they retire. Now they don't got no life insurance, and then now
that's what they needed. That's what they needed.
More, right? And now it costs a ton more. They got all these health issues. They might not be able to afford it, and now they die without life insurance. And then we, as a community, when someone dies without life insurance, they don't see the benefits of it and now they don't know that it's a real thing. Like one of my agents, his grandmother passed away. Like they used to live in Virginia. Okay, and I found out about this like yesterday at the office. His grandmother passed away. She the life insurance policy that she had for him, his mom, his aunt, and his aunt's a daughter as well too. It was $100K. Okay. $25K of that went towards the funeral and covering like any other things. Now they got $75K. That's what helped them move to Charlotte.
Jeez. Yeah, that sounds terrible because again, they don't really have enough. Because $75K per last year, 2 years. This depends on how you're using it. Right. Like again, like this. A lot of people in our community, African American, they don't really know about life insurance policy or how to benefit them. Like if you had like one selling point, you're talking to people that look like us, relate to us. Right. What would be your selling point to get them into getting life insurance policy?
My selling point? Yeah. My selling point. Ah, man.
So what is the thing that gets them to like? How do you onboard?
You know what? I got you. So what? I'll say it's two thought processes. Okay. Right. One, it's we focus too much on what things are instead of what things do. Okay. Right. Like so for example, life insurance. We hear life insurance, we think like, hey, this is what life insurance is. Focus on what it does. What does life insurance do? You benefit from it while you're living, and you use it while you're living. That's for one. Two, the other selling point, well, actually, I just kind of did a 2-in-1. Okay. Like, the way that I sell it to my clients is I sell it on like the living side. Okay. Because no one wants to think about death. Yeah. Right. It sounds kind of crazy. Yeah. No one wants to think about death. Yeah. But it's not meant for death. It's meant for living. Like this is the same thing that the Rockefellers did to build their wealth. Wow. Right? This is the same way that Walt Disney used. What's the same thing that he used to start up a Disneyland? Okay. Right? It's the same thing that Ray Kroc used to scale McDonald's. Okay. Right, it's the same thing that an OJ used to avoid getting his assets seized when he went to prison. Yeah, like he was able to protect $58 million because someone in his circle told him to move all of his assets into insurance products. Wow. This is what life insurance does. Does that make sense?
Okay, this kind of leads. Go ahead. Wale, you have
question. So, I've heard about IUL before, but you have to pay back what you take out.
No, you don't. Really? This is the crazy part. Yeah, no, you don't. So look, I want you to think about this, right? We all understand real estate and how you could pull out equity from your real estate, right? Yeah. Great. Now, whenever you pull out equity from your real estate, why do people like it? Because even though you pull it out, you have that money, you spend it elsewhere, the value of the asset still increases. Yeah. Right. Same thing with your life insurance.
But you have to pay that back, though.
No, you don't.
No,
in real estate you do. Yeah. Because if you don't, they take your house. Yeah. Right. So what in the insurance policy, if you don't pay it out, they just subtract it at death.
Oh shoot. All right. So, but basically, all the money that you've been building is what you have access to. Yeah. Right. And all the interest that you've gained over the
exactly right. So like, if you borrowed money from it, but it's still growing. And let's say that in the future, like let's say 20, 30, 40 years down the line, it accrued so much interest because of how compound interest works that your family is going to get like a huge nest egg, or even like worst case scenario, even let's say you borrow all of your cash value, like going back to that 500K example I gave, even if you borrow all of your cash value and then you pass away, your family still gets that 500K.
I got one question. Let's say you have, how do you get to the point of borrowing 500K?
How do you get to the point of borrowing 500K?
How much do you have to put initially into it to be able to borrow 500K?
So, okay, I'm gonna answer that question with a question. How much do you have to put into a 401k to borrow 500K?
500K.
Exactly.
Okay.
Does that make sense? Like,
but go ahead. I'll let you finish.
Okay, so like. And maybe I'll say a little bit more than 500K because remember, like a portion of what you put in goes towards paying for the life insurance, right? So like, I'll give an example. I had a client who put in 200K up front. The following week, he borrowed against it to he borrowed like 120K to buy a piece of real estate. I had so that's like that's rare that a lot of people do that kind of stuff.
Okay.
What most people do is that they start building it similar to how they started building their 401k. They the same. So like whatever your employee matches you and whatever you contribute, that's about like let's say 200 or 500 bucks a month. You put that into an insurance policy too. Make sense? Eventually it builds up, and then you borrow against it. Like not trying to put my business out there, but I'm not gonna say specifically what I use my money for. But I've had my life insurance policy now for 5 years. I touched it twice. Okay, one of it, the first one was for an asset. Okay, and if you're watching this, you know what I'm talking about. No. So the person who's watching this would know. The person would. So now the second thing that I touched it for is the house that I'm living in right now. I use my life insurance policy to pay for my down payment and closing costs for my house.
Okay.
What most people do is what? Touch their 401k.
Yeah.
Now they get hit with what? Taxes.
Fees.
Right. Or they'll take money out of their bank account, and then now they go into a house,
money.
rich,
Poor.
Right, house poor, yeah, right. Because now they don't got no house now they don't have any money for furniture. Yeah,
That's a good point. So again, if you're selling, I want to ask this question: the majority of your clients, are they older folks or younger folks?
Majority of my clients,
Yeah.
I'll say it's a decent blend, but I've had a lot of clients who are younger. Yes,
Younger. How do you sell? Because I feel like selling to younger and selling to older might be a little bit two different ways. Because if you're selling to someone who's 28 or younger, they don't really know what's going on. They're just trying to put money and make money as fast as possible. What's the selling point that you used to sell to people who are 28 and younger?
Well, that's easy. So I believe that we as human beings, we tend to believe more when we see, correct?
Okay.
Right. So what I honestly do is I show them a compound interest graph.
Okay.
Have you guys ever seen a compound interest graph? Great. You know that the first year you don't really gain too much interest. After 5 years you gain more. After 10 you gain more. Right. So it helps them understand that this is a long-term game. That makes sense? Right. Like I like to cut that like get rich quick out the butt. Why? Because there's nothing that's get rich quick. There's nothing in life that you could also lose easily. It fast. Right. And that's what I'm saying. Right. That goes for relationships. That goes for objects. That goes for everything. Right. So that's the biggest thing. And then two, I tie it to whatever goals they have. Okay. So for example, like let's say that I have a client that likes to travel. Right, I'm like, okay, so how do you typically travel? Do you typically just save money in your bank account and then you go travel? Yeah, okay, great. Whenever you do that, let's say that you could take the money out, but you're still gaining interest on that same money. Okay. How would you feel about that? And they're like, oh, that would be kind of cool. Great. That's a life insurance policy. Now you could choose to use it for when you travel, sure. Or you could use it to buy more assets, which is what the wealthy people do.
Okay. I'm 32 right now, and I have life insurance through work. But if I was trying to start my own right now and get to a solid portfolio that, let's say at 60, I have over $500,000 inside. Right. What would be my starting point?
I would say for you, because I know you have kids, I know you have a house, and I know you're married as well too, I would get a blend between a term and a permanent policy. Okay. So a term and an IUL.
So it would be one policy, because I have two policy right now.
No, it would be two. It would be two. Yeah. So like whatever. So in the insurance industry, the industry standard of how we identify how much life insurance coverage somebody needs is called DIME. Okay. Right?
What does that mean?
So DIME, so it's DIMER actually. So it's DIMER. Okay. So D stands for debt, right? How much debt do you have, whether it's student loans or all that stuff, right? I is income, okay? How much do you make? You typically want to multiply that by 10 and add that up. So what does that mean? If you were to pass away, your family will be able to live on, will be able to live for 10 years based off of your income, okay? M, mortgage. Okay. If you have a mortgage, how much do you owe on your mortgage? Great. E is education. Okay. If you have kids, in the event that you pass away, do you want them to be able to go to college, right? And then R is retirement. Okay. Because a part of life insurance, a product is annuities. Okay. Annuities is meant for retirement, which annuities is a whole different ball game that a lot of people don't even understand. If they did, they would be able to retire and stay retired. But that's besides the point. So now essentially between the term and the IUL, you want to have the coverage there. Okay. So let's say that the coverage you need is $2 million
after retirement
of coverage, right? Great. Whatever temporary, not after retirement, but just in general.
In general, yeah. Okay.
Right. Whatever temporary responsibilities you have, that's in term. So what's a temporary responsibility? A mortgage. You're not paying for a mortgage forever, ideally, right? Ideally, I say ideally, right? Yeah. Ideally, right? Yeah. So, will your kids rely on? Will your kids depend on you for their entire life? No. By the time they're like 25, they should be self-sufficient. Yeah. So you want that coverage off to the side for right. Okay. And then will you always have debt? Right. Yeah. So whatever is temporary, you put that in term. The reason why you don't want that in the permanent coverage is because the more life insurance you have in an IUL or in a permanent policy, the more the premiums you're paying goes towards paying for the actual cost of the insurance, unless it's actually going to the cash. Okay. So let's say you need $2 million of insurance. Let's say that your budget is, I don't know, let's say $1,000. Let's say that $800 a month, or let's say that $800 a month will cover $200K of insurance, because once again, in an IUL, you want as low as of insurance as possible, so more of that money is going towards the cash, right? I see. Right. You see, right. So now the remaining 1.8, you put that in term.
That's cheaper, right? Term is normally cheaper.
Exactly.
Term means that.
Exactly. Term means, so like, let's say a term policy for, let's say, 30 years. So if something happens to you within that time frame, you got $200K here, 1.8 here, it pays out $2 million.
Okay, but what if that term expires? You lose everything.
Yeah, but you're okay with that expiring because by the end of that term, your mortgage is paid off, your kids are out the house, so they don't need you anymore, right? So now, if you're a business owner, things get a little bit different, right?
How come?
It gets different because if you're a business owner, and year by year your business is growing and you're accumulating more assets, now you need more insurance to cover those assets. Did you guys know that that when Michael Jackson passed away, so in America, if you own assets that's worth more than 14 million a year, I mean that's worth more than 14 million in general, when you die it triggers taxes. It's called estate taxes. Right. So Michael Jackson's owned enough assets to when he passed away, and I'm not making this up. Go look at it. It's a Rolling Stone article. When he passed away, it triggered $700 million in taxes.
Wow.
Right. Michael Jackson had that money. Did his family have that money?
No.
Yeah. So what did they have to do?
So
back to who?
Government.
So who wins?
Government.
Right. Isn't that crazy to think about? Yeah. Right. Even till this day, they're still in court trying to get access to his assets. The real reason behind, truthfully, why they made the Michael movie, it wasn't for his legacy.
It was to get more money to pay his.
It was because his family they needed money. Damn. Right. Same thing happened. Same thing is happening to Chadwick Boseman's family as well too. Black Panther, right? Same thing with Prince. Same thing with Aretha Franklin. The list goes on.
As it gets closer to the end, we'd like to leave some time for our guests to highlight anything they're working on. Where can they find you, and just things you want to share with the public that you've been working on that need some public exposure.
I got you. Okay, so I mean, where you can find me is on social media. So my personal page is Bokar Diaby _. So BOKARDIABY _. That's on Instagram. My business page, my agency page is Join New Standard. And then my TikTok is Join New Standard as well too.
Shout out to you.
Some of the things that we're working on, so I have a team of agents.
How many agents?
I got a team of like 25 to 30 agents.
Jeez. All in Charlotte?
All in Charlotte. Yeah. Well, so if I include the ones outside of Charlotte, it's a little bit more.
I heard. To be honest, I heard that I play basketball at the LA Fitness all the time. I met a guy that was making multi-million dollars just doing insurance.
Yeah,
it's possible.
Yeah, yeah. Like my mentor, he's been in the insurance game now for maybe 13 years or 14 years. He makes like 2.6
yearly.
Yeah. Yeah. You
get a percentage of the value of the contract, right? You guys get a
percentage. It's like real estate.
Okay.
Like you know how a broker gets paid based off of every transaction, right? Yeah, it's like that, right? But it can go beyond that. Why? Because let's say, how do I explain it? Like imagine like a CEO who has like at a company, and they have different like individuals who report to them, right? Right, a different hierarchies, right? Yeah. Great. And let's say they open up a new line of business. Now that line of business creates income. Now another one creates income. Right. Great. Every time I have a new senior broker, that creates a new income stream for me. Wow. Right. And then so that's just that part. With the way that our agency is working and the amount of impact that we're making right now, there's also like profit sharing as well too. So like, right. So like, you know how in tech, like whatever, like let's say a Microsoft will give their employees a company stock. Why are they giving their employees a company stock? Because they want their employees to have ownership, so therefore they'll drive the company up. So what does that call it? Whenever equity. There's equity. Or what's that other word? EBITDA. EBITDA.
I thought that's what it's not used for how much profit the business makes.
Right. Okay. But then when the business shares the profits with the employees, that's called profit sharing. That's where company stock comes from. That makes sense? Yeah. So it's the same thing. So that all of that stuff stacked on top. It gets pretty interesting. So, but going back to like some of the stuff that we have that are coming up, we're gonna be doing a lot of community events. We've have like a couple of different ideas. So like a finance and fitness type of events.
The events you're doing tomorrow too.
Right. The 6 p.m. in Charlotte event. That's going to be a crazy sick event. I'm super excited. I'm super excited for it because once again, like it's always, it goes back to what we were saying. It's always good to work with people who actually have a passion for what they do.
Yeah.
Right.
Because you make it happen.
Exactly.
We've been planning this we were planning this last year initially. Then
attempted
we came back
to,
together. And if you never followed up, this would never happen.
No, facts.
Yeah, it's not about following up. Booker had the passion. Booker was driven. Booker wanted to make it happen. And I had the same passion also, so we made it happen.
Facts.
But I think just the last few minutes, we also like to leave it for you to ask us questions about ourselves. We're also a growing community. And just maybe you want let the audience know more about us.
I got you. No,
like one question.
I got you. So, I mean, okay, can I ask y'all the same question?
Sure.
Cool. Yeah. So, I wanna know what is the vision that you guys have? Like, what is your vision for HackerProof long term, and then what is your vision for House of
Founders?
House of Founders. That's what I want to know.
You want to go first? Go first. You may go first.
No, I'll go first. Yeah.
Okay,
so
it doesn't matter.
For House of Founders, the goal that we have is just how can people, like-minded people, get together and grow together, right? We have people that are in real estate, people that are in tech, people that have their own consulting agencies, right? How can you kind of share ideas to make our platform much bigger, right? We've done private dinners, right? We've done panel discussions, right? Of course, we want to do like a membership, a private membership where if somebody's in real estate, they need, I'm talking to a friend, they need a real estate, I'm going to go to our black book and give them, it's only life insurance. Bokar is my black book, I'll give them your number.
School, bro.
Exactly.
A school community and just have people based on.
Yeah, exactly. So that's a vision, right? But also making sure we have that social connection as well, because we're
living in a time that social is needed.
Yeah, so you may need some people you may need a time out to meet new people, right? And you maybe get more ideas from just meeting people. That's kind of where we are with our House of Founders.
I like that. Okay.
And for us, HackerproofHQ just started as an idea. Usually we all work corporate. We all like maybe 2-3 black guys in a group, or black girls in a group.
I got you.
And we all are African too. Well, the people that we started HackerProof were mostly African. And
Right.
we thought about like, just creating this space where like-minded people would come, talk freely, be able to laugh, be themselves, don't be too corporate. Because it's not your 9 to 5. This is your own personal life. You want to grow with people who you relate to.
Right.
So we created HackerProof for that. And just from creating HackerProof, initially posting flyers about different tech-related terms that people need to learn, and tech career field that is available. We grew it into a podcast environment. We started doing events. I think we're a group that tried things, and some things that we tried seems to work. So we kept on trying things. We did the podcast. That's been growing naturally. Started doing events. We did our first event 2 years ago with Culture FM, and that gave us the kind of courage to keep on going. We went to Atlanta. We have done a few in Houston, and now we are Charlotte doing one. Okay. And I have a business mindset, or where I see the organization going. We're also looking to expand our consulting, doing consulting for organizations, small business. And we also have an app that just came out, hasn't fully been promoted yet, but HireHack is out. Basically helps you optimize your resume, training for the jobs you're applying for, interview prepped, and basically job scraping the web for jobs that matches your resume to an 80% to a 90% percentile. So we're just building a corporate environment. Something started off as just an idea, has grown into what it is now, which is events, podcasting, application, and just doing consulting. So I think we could be one of those maybe in the future. I just keep working hard and believing in ourselves. We could be in those NASDAQ as an IPO.
I like that. That's cool. I like that. Okay.
But everything is just believing in yourself, making sure that you're the one driving your own life. Because again, there'll be a lot of noise from everywhere. And you might have to be the only driving factor sometimes. But again, just believing in yourself and knowing what you're doing is actually making a difference. Plays a big role in what you do.
Right. Yeah. I like that.
That's it. Is there any other thing I want to talk about?
No, just looking forward to the event tomorrow.
Looking forward to the event. Make sure you guys subscribe. Follow Bokar everywhere that he's available. Follow Wole everywhere. House of Founders. Wale is into so many different things. I can't even list it all.
Really?
But follow him everywhere. He's you can find him and keep supporting the mission. Peace.
Peace out.